Hey guys, welcome back. So we're talking technical trading. This is a series of videos talking about technical chart patterns that you see on your everyday charts. Today we are talking about pennants. Now very similar to flags, but with a little tiny quirk difference. What I'm going to do, talking about the official definition of a pennant, then I'm going to talk about put it on the whiteboard, then we'll run through kind of what it means for buyers and sellers and why it works. And also, if you've got a comment whether you think this is a good pattern or a bad pattern, or how you maybe twist it and change it a little bit to integrate with your trading, let me know in the comments below. Would love to hear how you have had success or not with the pennant. Okay, so in fact, let's do a bear pennant today. I've given the bulls a lot of love. Let's give the bears a little bit of love. And let's see if we can get my black pen out. I think you can see the black better. So the pennant is a drive lower and you get this kind of pattern. Can I draw this first go? Almost. So this is kind of what you get. It's a flag, but it's narrowing. Now, if you want to correct me on this, then you can correct me. And if you think there's a different definition, then please feel free to add your comments. But for me, this is a flag. Okay, it's pretty symmetrical. You've got your pole and you've got your rectangle at the top. A pennant for me, and that probably little, if I'm being very pedantic, I would get rid of that. You've got your pole, but you've got a narrowing taper to the edge of it, which is kind of meaning that similar with the flag is that you have the drive. And again, we talked about this in other videos, and it's something that I truly believe in, is that where this is positioned relative to the rest of the market is how effective it's going to be. If this pennant was, let's say we'd broken some key support here, some volume would come in, perhaps some news would come out, whatever it may be, we've driven through major support and then we've got the pennant at the lows. To me, that is far more powerful than if we've been chopping around. This is in the middle of a weak range. To me, that's not very powerful at all. So it's all about putting them into perspective. So what's the actual strategy, and what's the kind of, let's dig into it a little bit more. Blue pen, let's go with that. So we get the drive lower here. That's the momentum. That's the initial pulse. Finds a low. Find some buyers, sellers back off. What does it mean there? It means that sellers don't perceive it as value anymore. Buyers do. A little bit of a neutral point, then buyers step up. They become more aggressive. Price starts to tick up. Sellers perceive this as value. Now, this is where it gets interesting, guys. This is where you can kind of front run it almost, is that you say, well, hey, if that's 100% of the move, some of you guys may like to put a fib on that. I kind of do the thing of saying, well, that's my 50, that's my 25, that's my 75, and frame it like that. It doesn't really matter, honestly. You can use a fib, you can use quadrants, you can use thirds, whatever it may be. But it's basically what you want to see is that it doesn't encroach too far up. So you don't want a drive lower and it start doing a pennant like that, because it's not really a pennant. The lower and tighter it is, the better. So let's say it's in the lower quarter, that would be perfect. Comes back up, retests here, fails, pushes to low, hasn't really got the momentum yet to push too low, finds support again, pushes back up. This time, this is the psychology behind it. The psychology behind it is that it can't go as high. In other words, you've got a group of sellers sitting there, price is coming, and they're so eager to sell it, they can't even wait for it to come back to the price it was before. So they step in front, they hit it, bang, that's when you get that lower high. Same again, but they're not too aggressive yet to push too lows, or they may well be aggressive, but there may well be a big buyer sitting here soaking up all that stock, all that futures contract, whatever it may be. Pushes, can't get lower, pushes higher again. Again, people are a little bit eager, they don't want to wait for it to come up to prior highs, smack it straight away, and then you get this kind of pinnacle point here, where literally you get to a point where buyers step up, sellers hit it straight away, buyers step up, and it gets to almost a crucial point where the likely scenario is that you break to the downside here. Sometimes you will get a break to the upside here, which actually you may look at it and think, well, that's not very good because you're breaking against the flow. I don't think that's a very good pattern to trade. Actually, that's not a bad pattern to trade, because the one thing that does do for you, if it starts to roll over, is you can quantify your risk at that point. I hope you can see this. I've gone a little bit small here. I hope you can see what I'm talking about. You can quantify your risk. So if you break the pennant, to the upside, then roll over. You can say, well, this is obviously my risk level here. If that's where the disagreement came and where sellers hit it again, I will happily use that, get myself short and look for a break below the low. So it's actually not too bad having that false break, because also don't forget, guys, a lot of people will have their stop above these highs here. Okay, they'll have tried to front run it and will have that. So if you can get on board that, that might be the catalyst that causes it to pop, take the short, then have your stop above there. However, the classical way of the pennant is that it breaks here. There's the break, and you sell it as it comes through the low. And then you have a stop above the high of the pennant or the last high, however you want to trade it. Okay, so that's the pennant. I think it's a nice little pattern. It's a little bit different from the bull flag or the bear flag. Very, very similar in terms of you get that kind of not encroaching too much into the drive level, all those kind of good things that go with that. Quite powerful, but again, it depends where it's positioned in the rest of the market. If you like this video, give it a thumbs up. If you agree with the way I looked at the pennant, write a comment below. If you disagree, have a better way of doing it or something that works for you, also write a comment below. I love to hear different viewpoints on different chart patterns and different approaches to trading. Don't forget to subscribe for more videos, technical videos like this from me, the videos on discipline, psychology and strategy in the next few weeks and months ahead. Take care, guys.